George is the founder and CEO of ZFT Corporation, also known as Zeefreaks Tribe in the Philippines stock market community. A well-known stock market trader who notoriously challenged the norms of retail trading and investing industry in the Philippine stock market since 2013. George started off his trading journey calling himself Zeefreaks, as he regularly shares his lessons, winnings, and writings on the Zeefreaks blog. It wasn't long before the Zeefreaks blog started gaining traction, with many Filipinos asking to be taught the skills of trading the stock market. And therefore, in 2018, George decided to reveal his identity to the public and turn Zeefreaks Tribe from a club to a formal startup company that provides training and literature to Filipinos about technical trading in the Philippines markets. Now, with this short introduction, it's again my honor to welcome our summit speaker for this session, George Asibal. Hey, George, welcome to Online Trading Summit.
Hi, Philip. Thanks for having me. It's an honor to be here.
Fantastic. It's really a privilege to have you on board this summit to share with us your trend-following trading strategy. With the use, I understand it's going to be about 2 basic technical indicators. Now, before we get you started on your presentation, for the benefit of those summit participants who might not know you before this, including myself actually, can you briefly walk us through on your personal trading journey? How did it all started for you, and how did you actually evolve into the trader that you are today right now?
So I started trading 10 years ago. It was my last year in college, and it was out of desperation because during this time, my peers were already starting to graduate and have jobs. And there I was waiting for my internship. And it's a requirement to finish college. During this time, I tried a number of things to be productive. I didn't want to be a potato at home doing nothing. And of course, I wanted to make my parents proud. And it's an Asian thing. I got into a lot of stuff because of that. I got into direct selling, affiliate marketing, networking, worked in a bar, and did several odd jobs. And among all of those, there was trading. And it wasn't like other things that I did. I liked it because I could just be at home with my computer and not sell products I didn't really believe in. So I went online and researched about the stock market, and I landed in several local forums that was dedicated to stocks. And during this time, not a lot of people really shared their strategies. So I had to do a lot of self-study, the classic trial and error, if you may. And you can say it was beginner's luck. Because in a few weeks' time, I was able to make around 26,000 pesos, which is around 500 USD. And just to give you an idea, the average person in the Philippines would only make around 250 USD a month. That's really lucky if you get that. And I was so happy because in the Philippines, 500 USD is a lot of money for just a few weeks, not even a whole month. And then this got me thinking, like, why should I get a job with all the politics involved and doing some of the things that you really don't like? And that's the time I decided I'll find a way to, the fastest way to get an internship, graduate, and then I'll go full time.
I see. So
yeah, the rest was history.
So when do you realize that all of that was just beginner's luck? There must be something that bad happens that helped you realize that it was just beginner's luck, right?
Yes, definitely. I think it happened shortly after. I think several months, probably 4-6 months afterwards, I realized, okay, trading isn't as easy as I thought it would be. So I did a lot of losses, but there was a series of good trades that I had. So I didn't really click that, this thing is hard, because there was always that series, that string of beginner's luck. And I didn't realize that there was a concept of bull market and bear market. And there I was in the middle of emerging bull market.
I see. So I understand that it seems like a culture thing that in Philippines, many traders likes to use nicknames as a start. And I suppose you use Zeefreaks as a start to actually document your journey. And subsequently, people want to know, hey, who exactly is Zeefreaks? And then you start to let people know who you exactly is. So how did the entire process come about?
All right. Because, there's one thing. People love privacy. And I think it all started because of the forums. In forums, you can say stuff that you can get away with. In the Philippines, insider trading and stuff like that, that's very sensitive. And if you post under an alias, people can't really track you. I mean, our online cybersecurity isn't that sophisticated yet. So that's one thing. That's the reason why we went in and got into our aliases, and Facebook groups weren't a thing back then. Security is another issue. People would say, why would you want to post your gains online? That's going to be a very big security threat. Aren't you afraid of your life? Like, you posting those port snapshots of your gains, and people might get jealous, and just those things. Yeah.
So what was your motivation doing that then?
Yeah.
To actually post your returns online and stuff like that.
Well, the first reason was because people didn't really believe in technical analysis at first. That was the biggest problem. It was very weird at first because people, probably it's a cultural thing. We like what we call chismis or rumors. People who just like to talk and even if it's not true, spread rumors and gossip. That's our culture. And how would I say?
So you wanted to show people that technical analysis is really something real, and by showing your result, that's one way of actually proving to people that there is some positive advantage to actually using technical analysis. Right? Was that the main reason that you started?
Yes, that is the main reason. That is the main reason. It's very hard to convince people if you don't show them results or you don't show them money. And during that time, it was just people saying, I bought this at this price, and how would you be able to verify that if you don't have, the screenshot of the trade? Right. So I really wanted to challenge people. Are you sure? Are you not just giving me some bullshit here? Are you really you putting money where your mouth is? So during a series or a period of time, I was there in the forums posting both my gains, my losses, everything. So, and my account wasn't that big. So it's like, I'm a nobody. It's okay. I'll just be posting. And that quite started a trend, especially when we moved into Facebook, where there were a lot of people who were pretty amazed by those things. But for me, it was just like, oh, this is my process. I'm just sharing what I know. And I started to document everything through my blog, and that's where it gained quite a following.
I see. And it's probably a form of accountability for yourself also as well, right? Just to put yourself in the public so that there's someone that's watching you and make sure that you are not doing anything out of the norm with the kind of way that you trade and stuff like that.
That's true. And also another main reason why I was choosing not to be known, because I was a kid back then. Now I'm 31. So that means 10 years ago when I was 21, nobody would believe a kid.
I see.
I didn't have the credentials. I didn't have the connections, everything. I just really wanted to see people through this name that you don't need to have the necessary, all these other stuff. You just need to have discipline in order for you to be able to succeed here in the markets.
I see. So from the point where you started to become interested in trading about 10 years back, to the point where you realize 6 months later that you have beginner's luck, and to the point where you start to realize that, hey, maybe trading is really something that you can excel in. How long did that take, and what was the main evolution for you? What was the main changes as you evolved through these few different stages?
Well, I would say it took me around 5 years to really master the whole system, make it all around, because building a system isn't really that simple, and it's not easy. You go through a lot of losses, and I would say those losses, which didn't really happen overnight. It was really a season of losses and then a season of winning and another season of losses. And those series of losses is where I really got to evolve as a trader, because you get to know more about yourself and you get to learn more when you lose, when there's pain, versus or as opposed to when you're winning. You don't really learn much when you're winning. It just validates what you've learned.
I see. And so I suppose that how long ago do you actually started to mentor people as Zeefreaks Tribes?
Yeah. I started to mentor ever since. It depends. There was the formal mentorship and there was the informal mentorship. The informal mentorship started early as 2013. I got people interested because I really just wanted to share what I know. That's all. Okay, if we win, if we lose, that's okay. As long as you guys wanted me to teach you, then that's fine. I'm here to share. And then I started to formally mentor the next year. I think it was 2014 and 15. And then seriously, I said, okay, we need to start, because there was a lot of people who were actually wanting to know how the system works. And I believe in quality versus quantity. I'm not the type that would want to teach in a classroom. I want that personal connection with my students. I want to really teach not just how the technicals work, but how my mind works, how I do my life, and the principles that I share. So when I started ZFT, I wanted to prove that the system can be replicated. And so I started this program that my students, I would be the one personally teaching them, but it was my students who would teach. And if they would be able to replicate what I have taught them, then that just proves that the system works.
I see. And I read that, and I understand that you guys also have this model of getting the students who already know how to trade to also help to mentor the other new students, right?
Yes, that is correct. It's like a cycle. So it's more of for the benefit more of the student or the coach, or if the more that you teach something, the more that you will learn to retain the things that you've learned. I mean, you wouldn't want to teach something that's bullshit, right? So you'd be like, okay, if there's something I do not know, I need to learn what the student wants. Otherwise, I'd be a fraud.
I see. All right. So I'm very sure you are now all ready to actually get started with your presentation to share the system that you are using to trade your own portfolio. And now to the summit participants watching this video right now, I'm sure you're just as eager as me to seek George insights. But before we head into that, I would like to take a moment to thank and introduce you to our summit sponsor.
Hey, I hear there's this new blue chip. It's going to be Moon. You should bid so not to get wrecked.
You're new to this, aren't you?
Yeah.
Just copy what I do. First,
Trade like eToro's top traders. Turn their experience to your advantage by automatically replicating their trading actions. eToro. Try it now.
isn't this your flaw?
Not anymore. I'm copying you.
All right. Maybe like Chinese.
Hello, everyone. Welcome to my presentation. This is really simplifying technical trend following in the Philippine markets for everyone. So I hope you enjoy my presentation. Let's move on and browse through here my trading and investment style. So I'm a price action trader. I do technical analysis, and my methodology is trend following. My trading horizon is weeks to months. So it really depends until if the trend would bend, then that's the time that I would be selling. My asset class is Philippine stocks only, and I would prefer a market cap of more than 1 billion. Well, the bigger, the better. Average volume, more than 1 million pesos in traded value. The Philippine market is, just for context, it's quite an illiquid market with only less than 1% of the whole population participating, and that's why we need to have this kind of parameter. Stock price, any, I don't really care if it's above 1 peso or below. My trading setup and trade strategy, it has to break out from a trading range. So I don't trade sideways. If I do, then I would be breaking my rules. Key consideration, another one is a breakout from key resistance level. It should be at least 6 months or 9 months. The higher, the better, especially if it's a 52-week breakout or a 1-year breakout. So just for everyone's context as well, I use moving average alignment, which is the 20 MA. I use that for my short-term trend following. 50 MA, which is for the medium term, and 100 MA for long term. And if you have this kind of alignment, which is the moving average 20 is greater than 50 and the 50 MA is greater than 100, then I call that alignment of the stars. Another key consideration, my entry price should not be too far away from the technical stop loss level. All right. As for my risk management strategy, I don't do leverage. And for my stop loss, there should be a strict exit when the negative 5% is reached, especially for trend following, and especially when the trade invalidation level is broken. Now, each position will ideally take not up more than 35% of my total equity. All right, it's quite big. And each open position will risk losing not more than 2% of my total equity. In the worst case scenario, I will take a 3% hit, especially if it gaps down unnecessarily or out of nowhere. And I would buy usually in tranches to help minimize risk and maximize the allocation and the rotation of funds. I love to rotate my funds. I don't really stick to one stock. I don't love stocks. I rotate my investments. As for my profit-taking strategy, I always look to get a risk-reward ratio of 1:2 onwards. Manual trailing stop using moving average and DARVAs, or support and resistance, to take profit if the move is gradual. The better it is if it's steady. If it's too fast, then I will exit half of the position and hold the rest. As for my portfolio strategy, I have a maximum number of open trades of 5. Not more, because if it's too much, sometimes I get overwhelmed. I don't want to be watching a lot of stocks moving at the same time. As for strategy or portfolio size, usually when I do my trend following, it would take 50% of my portfolio on a good season because it gives you more time freedom. I wouldn't have to watch a lot of stocks if it's trend. Just follow the trend. Not necessarily have to watch it every day. And during bear seasons, it usually won't go beyond 20% allocation. Sometimes I would be all cash because it's a dry season. Sometimes it doesn't really show. And my trading edge, I would be able to identify if a stock is a potential winner within a minute, less than a minute even. And I would be able to ride the strongest stocks within a given season if it's a bull or a bear market. If it's a bear market, I would see that, okay, the trend is really good, it's an outlier, then you can see it clear as day, especially if it's a bear market. The Philippines, just for context again, is a long-only market. We do not have shorting. So you can't make money if it's going to go down. And another thing with my edge is it's a very well-defined and well-controlled drawdown when things don't work out. So just practice strict cut levels. You have to master cut and you'll be able to do very well. Now, here are the potential downsides of my strategy. Sometimes it takes forever for the trade idea to show up in a bear or stagnant seasons. Like if it's a sideways, you might be waiting forever and your patience will be greatly tested. Another is it's prone to bull traps for setups that aren't 52-week breakouts. Sometimes that just happens. The market really doesn't go according to our bias. That's the game. The market is a game of probabilities. So with that, that's the overview of the strategy. Let's have an example. Let me just first introduce to you a few concepts so that tuloy-tuloy tayo, we can be continuous in our explanation and in the samples ahead. So first concept is the trailing stops. It's a trend follower's best friend. The trade always starts with a significant boss breakouts. This could be, again, the 6 months, 9 months, or 52-week high. We love to trade 52-week highs or all-time highs. And in this case, it's an all-time high breakout. So we're going to be assuming that we are going to buy at this level. Here below is a 20 MA, or the 20 moving average. This is not a trail stop, all right? This is not a trail stop. But you can use it as a cut point. So let's go on to the difference, just so that you would get the explanation. Cut point. And what is trailing stop? What is cut point? Cut point is there to minimize the damage if the trade goes against your bias. So it's there to protect your capital. All right? While the trail stop is there to maximize your profits when the trade goes towards your bias. So it's there to maximize your profits or to protect your profits. You don't want your profits to go to waste. All right. So now that that's done, let's continue. Here we have the progression of the stock. It rallied, and your moving average, which is a dynamic trailing stop, meaning it moves with the price. Since it's already above our entry price or where we bought, then it can be it could be a valid trailing stop because it is already above your entry price. All right. And do take note that there will be moments, especially intraday, that you might be shaken out. So it is best to wait for the closing price because you don't want to be getting whipped, like you sell and then by the end of the day, it closed higher. That always happens. So if this happens, and you're, let's say, afraid of what's happening, if it would just go down really fast, then probably just sell half of your position. It would help with your psychology so that you wouldn't have that trigger finger. All right, so that's a possible shakeout. And then here we have on the next progression, we see that our 20 MA has already been hit. And when that happens, that's the time that you sell. All right. So just remember that one candle over here is equivalent to 1 day. So we're really trend following, which means it's really a waiting game as well when you exit. When your trail stop is hit, again, do not hesitate to sell or close all your positions. That's it, game over when that happens. And here, do you want to continue? Now I'm going to be introducing you to another concept in our system. The system that we use is what we call the ZFT strategy, or Zeefreaks ZF Tribe trend following strategy. And I'm going to be introducing to you the circuit breaker. Now, for those of you who don't know what a circuit breaker is, it's a device for stopping the flow of current in an electric circuit. It's a safety measure, especially if you have a house. Let's say you don't have a circuit breaker and there's going to be an electric surge, you might burn your house down. And you don't want that to happen. In trading, a circuit breaker is your stop loss or your profit stop. Okay, it's going to help you preserve your capital and help you maximize or grow your portfolio. So the circuit breaker, it's very important to have one, not just in your house, but also in your trading system. So it's now, next is how to maximize our trailing stops. All right, I'm going to teach you right now, introduce to you one of the circuit breakers that we use. The earlier one early circuit breaker was the moving average. Now we're going to go to the SNR. So here, the blue line over here, that is a significant breakout. We're going to be assuming that we have bought in that level. All right. So first, again, this is our current DARVAS and 20 MA trail stop. DARVAS is equal to support or resistance. All right. 20 MA, that's your, this is your 20 MA over here, and then your DARVAS, which is the support level. And as your price moves and progresses, you should also be moving your trailing stop. You cannot just use your previous trailing stop and put it there forever. This is not Batman forever. You have to move it. You have to always be dynamic about your trailing stops. You want to maximize your profits, and you need to move every time the market allows you to do so. So if this is your MA, your previous trailing stop in moving averages, this is going to be your new trailing stop. With moving averages, it is automatically system generated. The charts will do it for you. But for DARVAS, it is static, which means you have to manually set it. So if this is your previous trailing stop in DARVAS, you have to move it here, especially when you have a breakout and the price is progressing towards your bias. Now, on the next progression, you have seen that the 20 MA has already broken down. And when that happens, you can decide, to sell everything or sell half. And why do we sell half? Because you still have your DARVAS over here. It's still holding. So again, this is the system. If you're a trader who is comfortable to sell everything when the 20 MA level is hit, you can do so. That's fine. If you want to sell, if you have, you will have another option to sell everything if your DARVAS trailing is hit. So it really depends on you. Just as a trader, you have to decide beforehand what you will do. So you would be confused when this happens. On the next progression, what happened? We have a breakdown on the DARVAS, and this is the time that you're going to be selling everything. If you have held all your positions, you didn't sell when the 20 MA broke down, this is the time that you will sell all your positions. If you have held half, this is the time also that you will sell your remaining tranche. All right. So when two circuit breakers are triggered, that's when you know that it's game over. All right. So that's combining the best of two simple but very powerful tools, the moving average and the support and resistances, or the DARVAS concept. Now let's go on to the next concept, which is MA switching. Okay, so riding trends until exhaustion. This is another reason why, in this example, we're just going to be using moving average. All right, no DARVAS, just plain moving averages. Remember when I started the presentation, we have 3 in the ZFT system. We use 20 MA, 50 MA, and the 100. In this example, we're going to see how we're going to be using the 20 and the 50. All right. So again, a trend follower always starts with a significant boss breakout. In this case, we have a 3-month boss breakout, meaning 3 months resistance. It has broken out. We buy half a tranche, or let's say your first tranche, and then on the second, this is a 1 year or 52-week high breakout. And this is if we're going to assume that we bought into these 2 levels equally. That blue line over here that has been highlighted is your average entry price or your average cost. Okay, so here your 20 MA and 50 MA obviously is not applicable as a trailing stop, not yet at least. All right, even if you have that good breakout, you're not going to be using that as your trailing stop. Doesn't make sense because it is below your average entry price. All right, the only time that it's going to make sense if those moving averages are above your average entry price. Otherwise, you're just raking in losses. Now here in the next progression, we have seen a breakout. There was a short consolidation, and then we've seen a breakout. The 20 MA here now is applicable as a trailing stop, but the 50 is still not applicable. All right. And you know what happens if you make this as your trailing stop? If you forget that this is not a trailing stop, you're already in profits, and let's just say that something happened the next day and the price just went directly below your AAP and to that 50 MA. What's gonna happen? This is a visual image as to what will happen to your money, from profits to chocolates. Okay, and you don't want that to happen. All right. So here we have our progression, okay, of the average, of the stock. Not a lot of consolidation going on here, just directly going up and up. And so you see that our moving average is following the prices, which is really good. And in here, our MA trailing stop, that is our updated 20 MA, our updated trailing stop for the short term. And now you can use the 50 MA as your trailing stop. But let me just tell you that this is not practical, all right? Because it's very close to your average entry price, and the price is already probably moving really high. And if that happens, it's better to just use the 20 MA for selling everything, all right? Unless you would like to really maximize everything. Let's say if you sell half when the 20 MA breaks and then wait for the 50, that is fine, all right? Just don't hold everything and wait for the 50 MA to break down before you sell everything. All right, so I just like to share to you a declaration that I have, since we are technical traders and we would like to be very objective and less subjective with our trades. And so this is the declaration: I will buy only when there is a buy signal, and I will sell only when there is a sell signal, right? If you want, write it down, put it somewhere that you'll see it every day. So in this next progression, here's what happened. There's a wild long black candle appear. What are you gonna do? So I actually did a poll with my community, and a lot of people said, okay, they are going to be selling. And of course, some people, after seeing the declaration, they said, no, I'm just gonna be holding and waiting until my stops are gonna be hit, which is good, all right? Especially if you have a system and you wanna be strict about it, you want to be very objective. Again, if you want to be sustainable with things, you need to be objective, especially by respecting your trading system. So in this case, the best course of action is to really just hold, all right? On the next progression, we have seen that your 20 MA is already broken. So that's the time that you will sell. You can sell half of your position or you can sell all. Again, it depends on you as a trader, which you feel is more comfortable to you. So for those of you who are still holding and who are wanting to maximize the whole trend or the whole move, you can wait for the 50 MA. Who knows if it's going to go up or if it's going to go down? We don't know. The market will tell us eventually. So what happened next? All right, we have seen that it recovered and consolidated, made a sideways pattern, and your 50 MA is still valid. Probably some of you are saying, buti na lang, or glad that I didn't sell everything. You know, like, shame on you who sold, you weak hands. But again, that is not our point. Our point is to be objective in our trading system. So for those of you who are still holding because of the 50 MA that is still valid, that is fine. All right. But in this next progression, all right, here you see that the MA50 is already above prices, which means that probably it's going to make a turn. The trend might be sideways now, but eventually it probably will be going down. And this is the time that you're going to sell because the sell signal is already there. So when you see that, again, game over, sell everything, and that's it. So again, that's for maximizing MAs or MA switching. So let's continue and start with another example. All right. And I always get this from a lot of people. They always ask me, how and where do you buy? And I say, I always buy before, during, and after the breakout. So normally, if I see a breakout, it just wouldn't be in one tranche, all in, that's it. No, okay, I don't do that. I usually wait for a pullback first, and then that's where I get in. So in this case, we have a new 1-year high. And then we first look if the price would support or find where it's going to support. You notice that there is also all the MAs are below. Remember, we have alignment of the stars, which is 20 MA is greater than 50 MA and 100. That is what you see right here with that MAs, the red, the pink, and the blue line. And you're seeing that the price is holding in that support, DARVA support. So when that happens, if you're going to be entering this trade, of course, you want to be setting where your trade can potentially be invalidated. Meaning, if it reaches that level, that means all bets are off. You're not going to be trading this, all right? So this is your exit point or your cut point. Okay, so again, let's go to buy before, during, and after the breakout. Now, if I'm a trend follower or a swing trader, I would usually use the 3%. I would usually measure from the breakout level, 3% above and 3% below. That is going to be my buy range. So anytime the price hit within this range, like for example here, this is a 1-year resistance. Okay, this is how it looks like buying before breakout. So when the price is near the breakout, I buy a tranche, all right, in anticipation of that breakout. And then if it breaks out, I buy another. And finally, if it goes above that level, the breakout level, then I buy another tranche, all right? I never go all in on a single tranche. No, because it's very frustrating when you buy and then it doesn't break out. What's going to happen is it's going to mess up with your mind. You don't want that to happen, all right? Going in tranches eases the psychological pressure for us to be riding that stock. Okay, and it's also a money management technique that reduces your risk. All right. So here we have the progression of this chart. Again, it broke out. And if you're going to see the levels to which we have bought this level, this is it. You have a lot of chances to buy this. You won't be able to just, be focusing on that one day where it's going to break down and you're going to buy everything. No. Okay, so there are a lot of chances to buy, and that's how I do my buys. So just a review, can this be considered as a valid trading stop, the 20 MA? And the answer to that obviously is no. If you use that as your trailing stop and this is your current price, it already broke out, and then let's say the next day it went down, use this as your trailing stop, this is what's going to happen to your money. You don't want chocolates, all right? You want money, not chocolates. How about this one? Can this be a trailing stop? Obviously, it's above your average entry price, so that is a valid trailing stop. You can use your DARVAs, especially when you're starting your positions. Okay, so we go on to the next progression. What happened? All right, we have a series of rallies that happened over here. That AAP or that blue line, that's where we entered, assuming that we followed that 3% rule. Okay, we bought below, we bought above, and then we bought on the breakout. That's probably going to be your average entry price if you bought in equal tranches. So in this progression, we are seeing that there is currently a support level that is holding. This is our DARVA support. So we can use that as a stop if we want. But to me personally, that's too tight. But we can use that. And of course, the 20 MA is following. We can use that as well to sell, again, half of our positions and probably half if that DARVA support gets broken. All right. So if this is our current DARVA trail, our previous trailing stop, we can use this current one or the new, or we can use that as an optional DARVA trailing stop. But again, if you want to not choke your positions, you can use the 20 MA. Really up to you. So here in this next progression, we have seen another breakout, very strong trend over here. And probably you're counting your money. How much money am I going to make if I sell at current levels? But you're really too greedy to sell. And that's why you're still holding. And on the next progression, here we are. We have finally our correction. And the 20 MA has already been hit. Now, what do? Again, remember our declaration. Only buy if there's a buy signal. Only sell if there's a sell signal. Right now, it's showing a sell signal, especially when that 20 MA has broken down. Then you have the option to sell. All right, sell half or you can sell all. So just look at this image, burn it into your mind. Remember the circuit breaker principle. It's game over, but it's gonna ask you, do you still want to continue? Why do you want to continue? Because we still have the Darvas that is currently holding. All right, and since it's still holding, the game can still be okay. All right, so on the next progression, for those of you who have been holding, this happened, all right? And again, what are you gonna do? You have already sold your 20 MA, but this happened while bull trap appeared. What are you gonna do? A lot of people would feel very anxious when they see this. It was already a breakout, but then it actually was a trap. So you'll have to probably endure a long time of consolidation, waiting for it to, for the buyers who got trapped to sell and be absorbed by the new buyers, and hopefully create a solid base so that the current Darvas tail won't be hit, and eventually you'd have to sell your positions. So, yeah, to sell, the question is to sell or not to sell. What do you do when this happens? A consolidation. A lot of people would lose their minds during the consolidation. They would think at night, okay, is this the time that I'm going to sell? I'm going to sell tomorrow. Especially in the Philippines, that we haven't have the automated trading in all brokers yet. Some brokers, they do have it, where you can just set your stop and then automatically, if it hits, then the position will close. But since many of us still use manual, then this is what you can do, all right? Just approach consolidation with an if-else statement. It shouldn't be that hard, all right? We're making it simple. Not necessarily easy, because the easy part is will depend on your psychology and understanding of things. So again, approach it with an if-else statement. Let's draw that box over here. Okay, if the resistance breaks the top of the box, then if you don't have any positions, you have the option to buy new shares. If you have existing positions, you can add. That's it. That's our condition. How about the sell? All right, the lower box, or if the support, if that breaks, that's the time that you're going to be selling all your remaining shares. All right, that is your if statement. What is the else? Else, do nothing. All right, sometimes it's easy to say, but very hard to do because it requires a lot of discipline. You have to condition your mind. I'm not going to sell today. There is no sell signal. I am not going to sell today. All right, sometimes you have to make that as your morning mantra in your meditation, especially during consolidations. And that's why we need to not go all in on one single stock. You need to have other stocks so that while the other one is consolidating, you can be busy worrying about your other stocks. All right. So we're gonna overlay this whole plan with a chart, with a chart that we've seen. All right. So this is again our if-else statement, our if conditions, and this is the chart. All right. Now, what happened? Is this a breakout or a breakdown? Obviously, it's a breakout. So for you who have been holding for how many years already, you'd say, yeah, finally, more money, and you're going to be starting hyping all your people. Do not do that. Again, you don't want to be unnecessarily hyping yourself. You want to be objective with your strategy. And when a breakout happens, of course, again, you want to move your trailing stop as well. Every breakout, move your trailing stop. That's the market telling you, hey, you know what? Good job. I'm giving you more profits or a more buffer for your profits. So here again, for those of you who do not have shares, or those of you who sold your shares, you can buy here. And that's just optional, especially for those of you who are still holding the stock. And again, this is your old Darvas. This is going to be your new Darvas trail. And on the next progression, we have seen another breakout. And of course, we are going to be moving our old Darvas to here. That was your old Darvas. Currently, we're going to be moving it over here. And if you would like to have the option to reinstate your 20 MA, you can do so. All right. So if you have, let's say, if you haven't sold anything, or you have sold half of your position and then the breakout happened, what you can do is you can divide your position, and the half would be on the Darvas trail and the other half is going to be on the MA trail. So you can do that. All right. So here we're going to be reinstating our 20 MA trail stop. On the next progression, unfortunately, after the breakout, we have seen a trap and then eventually a breakdown. So here you would see the Darvas and your 20 MA getting hit. And what does this mean? That means do not think twice, just sell everything because it's already game over. All right? Circuit breaker activated, done. Don't have any hopes that it's going to go up. It's going to be the next big thing. It has already been the next big thing. You have already made lots of money. Leave. Find the next stock. That's it. So this is an actual trade with a holding period of 105 days. This was my longest trend following that I did. And I want you to remember that if you are a trend follower, you will have to accept that you will never ever sell at the top. That's the limit of being a trend follower. But it's okay because you're following a trend. All right. That's what the market has given you. And this is the actual screenshot of before I sold the position. So I made above 7 figures here, a million, more than a million, 43%. Pretty good. And if there's one thing that I want you to remember, it's this. And if there's one thing that I want you to 7 figures here, a million, more than a million, 43%. Pretty good. And if there's one thing that I want you to remember, it's this. Respect your trading stops. Because if you don't, remember this image, right? Chocolate coins. You don't want your profits to only give you chocolate coins. Now, as a summary, why this strategy and how you can implement it too. Number one, do not average down or catch a falling knife. We are here to catch trends going up, not trends going down. All right. Average or scale up when your stocks break out from key levels. So if you see a breakout and then it does another breakout, you can add to your positions. So as long as it creates breakouts, you're good. And lastly, never forget to adjust your trailing stops when the market gives you the chance to do so. All right? You don't want those chocolates happening. Now, if I was able to give you some value, like and follow our Facebook page here at Zeefreaks Tribe. And that's the end of my presentation. I'm just gonna go ahead and show you how I usually do it. I'm gonna show you a simulation. Okay. So right now we're at the trading grounds with Investograms. So they have this app built, and it's focusing on the PSE, Philippine stocks. I will not know what the stock is until I hit that end game or until we finish the game. So here we're going to have a live demonstration of how the system works, and hopefully you're going to get more insights as to the strategy that we're using. Okay, so I'm just going to hit play. And here we have a really huge downtrend. And what we want to be looking at is first a major breakout. That's what we want to happen first. So we're just going to check monthly, and we're going to be counting the candles. We need 6 months at least. 1, 2, 3, 4, 5, 6. Okay, we're going to put our resistance marker over here. I'm going to switch back to daily and see where that level is. So that's pretty far away. This is that level over here, which is the highest point. So most likely it is here. That is, we're going to assume this is 6 months chart. So we're going to be continuing, and what we want to happen is an average alignment of the stars. So we're just going to proceed here, and we're going to be taking notice of the 6 months resistance. So right now we don't see where the previous high is. We're going to look at the recent one on the left side corner. So that is where our resistance is, and we're going to be trading, or we're going to be buying once that level is broken. All right. So now we see that we have an alignment over here, but our buy signal, we can already put it over here. So if this level breaks out, since this is the highest point within this time period, we're going to be buying our positions. But of course, what we want here, an ideal, is to have a range first before getting in. We need to have a pullback. So we're not going to be buying just because it broke out. All right. So here we can actually start buying. And if we buy here, we would like to put our stop at either in an invalidation level, since this is our first tranche. Unfortunately, here it assumes that you're going to go all in. But again, we want to be not unnecessarily choking the position. So we can put probably a stop over here. All right. This is going to be where we will be selling the stock if it drops. All right. So that's one tranche. Not really my ideal, but since the system tells us to go, then we will just trust the system. Okay, so here our 30 MA is quite far from our average entry price. So we're just going to be crossing fingers that these levels are going to hold. So we're just going to take this out. That's going to be our where we had our breakout. And currently that's more than 6 months breakout. Let's see where it goes. All right, another breakout has happened. So now what we can do is, since our 20 MA is quite near our position, we can move our trail stop over here. We're just going to use the Darvas, since it's not really practical to use the 20 MA for now. So we're going to use the Darvas. All right, another breakout, another breakout. So right now the 30 MA can be used as our trailing stop, but again, it is not advisable that we use this because it's too near our average entry price, and we're already at a 13% gain. So what do we do? It's only 11 days, 13% gain. Not bad, right? So what we're gonna do is just adjust our trading stop, wait for hopefully a good retracement, a shallow one, and then we'll see where it goes. Okay, that's for people, prices don't go on a straight line. Other people would choose to sell here, and I won't blame you because especially for momentum traders, this is already a sign of negative momentum or weakness. But again, since we are trend